We are here with Mr. R. Subramaniakumar, the MD and CEO of RBL Bank. Mr. Kumar, you're here at the Global Fintech Fest. Some of the conversations that have been going around is with respect to, of course, retail, but also on the commercial side of the story. As a lender, as you're looking at this event, what exactly is your outlook?
See, we wanted to see that how exactly the fintech, which is innovative and which is providing a lot of scale, how they can collaborate effectively with the bankers so that we are able to provide the best value to the customers at the end of the day. And we wanted to see that how the seamless journeys can be planned out for not only the retail consumer where the maturity has been already achieved in the fintech space, how this can scale up in respect of the MSME segment. That was a major theme with which we are interacting with some of the fintechs. In fact, some of the fintechs who have an ability to reach a little deeper, also in conversation with us, just to understand how we are mastered the art of underwriting and assessing the risk in the entire credit dispensation. So these two things is going to be the collaborative. They are looking for the guardrails and the compliance and the risk underwriting from us. We are looking and collaborating with them to see that how we can seamlessly provide a easy and better journey for the customers.
Specifically talking about the MSME lending space, now of course the RBI has come out with its unified lending interface, which RBI promises it to be like UPI did for payments, ULI for loans, and MSME is a focus area there. As a lender, as you're looking at this technology coming up, what is it that you want from it?
See, I feel that it is one of the another far-reaching and a groundbreaking initiative by Reserve Bank of India, and with the NPSI at the top of it. I get a view that it is going to provide the bankers a little deeper, wider, and more than that of a kaleidoscopic view to that of the specific and broader view about the borrower and their ability to borrow. Today I am in a position to lend them to the extent what I am able to assess them and I am able to get the data. With this kind of platform, it is going to provide a much deeper and broader one with the land record and all those data which otherwise is difficult for us to assess it. With that broad data, possibly our risk assessment and our ability to assess the right sizing of the loan is going to go up, which will help us to grow, and it will also help us to provide a correct loan size to the borrowers also. If it is a right sized, their ability to grow will also go up.
As a lender, the RBI has put some restrictions on unsecured lending. There's also corporate that is not really taking off that quickly as expected by some of the lenders. So what is it that you want to grow in specifically?
See, we have made it very clear earlier for the last 4-5 quarters also we said very clearly. Our focus is on the new products which we launched, which is a secured product. And this is fairly scaling well. And in respect of the housing loan and LAP loan with its variants, we are able to expand it from the few locations which we did it in the last 2 quarters. Now it is going up. That is going to be the focus which we are able to do. And we are pretty sure that with that growth, we will be in a position to achieve the 30-35% of the loan book covering that secured. That's what our plan is.
And at this point, what is the secured portfolio?
At this point of time, it's around 2020. I mean, secured portfolio is fairly high because the thing is my entire corporate is secured only. If at all you look at it, around 70% of it is secured in itself. And we may try to increase it further. The combination of the mix is going to change from that of the low yielding secured to that of the medium yielding secured.
Okay.
So that's going to be the combination change.
In terms of retail secured, then what is it that you're looking at this stage?
Retail secured, we never had a product like a housing loan, AHL. We never had a product like a LAP loan, loan against property, gold loan, and education loan. And we never had a two-wheeler, four-wheeler. We have launched all those products, around 7 to 9 products. We launched it in the last 1 year. Those products have more or less come for stable. Tech platform is ready, our collaboration is ready, our teams are on the feet. All the investments which have gone in is started moving up. See, it could have scaled much faster, but we are a little cautious about the fact that growing for the sake of growing is not our intention. Growing sustainably and growing with a very stable and quality book is what we are looking at, which will definitely take a couple of quarters for it to scale further.
Lastly, on the liabilities front, of course, there's been concerns raised by the government, raised by RBI governor, even analysts pointing out that maybe the system's deposit growth needs to pick up in favor of retail more. The other side of the argument is that liquidity in the system is tight, so it's just that deposits are not coming because the inherent liquidity tightness is there in the system. How are you viewing this, and as a bank, how are you trying to cover for this?
See, as far as our bank is concerned, our total share of the deposit to the entire market is 0.5%. growing that 0.5% at the rate of around 15 to 18 to 20% should not be a challenge to us. Going by the past, what our bank was able to achieve, we are able to do it. Our focus is not the pure play deposit. We are focusing on granular deposit. Okay. What I mean by granular deposit is a CASA plus less than 2 crores and less than 3 crore deposit. That's the DNA of the bank has changed. If you look at it, the granular deposit growth is always higher than my retail growth or secured growth or my advanced growth. So we will continue to incremental growth is going to come from the granular, which we'll use it for our advanced growth. So with our 1,800 distribution centers, with around 1,200 my subsidiary branches and around 550 branches our own, we will be able to reach out. This particular number achieving should not be a problem to us because last 3 quarters we have been consistently achieving this number.
But you're a very well experienced lender, sir. Worked across the public and the private sector spaces. For the system, do you have any comment?
See, the system, if you look at it, yes, you would have heard it from some of the large banks also saying very clearly that everybody has their own need for the deposits. The extent of their ability depends on what they are planning for the growth of the advances. So if you look at it, some of them may moderate it, some of them may try to get it from the different sources, some of them may deep-penetrate, and a few of them have launched a new product along with the fintech companies also. So each one will have their own strategy for doing it. But as a system, what I feel is that, of course, it is now you would have seen it in the last quarter that deposit growth was much faster than that. Possibly, in my view, is that if you bring a focus back from the banks, they are capable of raising it.
All right. Thank you so much, Mr. Kumar, for joining us in this conversation, sir. Pleasure talking to you.